Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, I'm back behind the mic, fired up, because I'm going to show you two things today that will absolutely blow your mind. I am going to show you that no risk trade, and I think you're going to like it. I'm also going to show you a recent cash secure put for which I did 300 shares, but I used my own discipline. We always talk about it. We wanted to leg in. That's exactly what I did. Knocked down over $1,000, and I don't even think it was a week. We're going to use the volatility in this stock market to profit. So I need you to sit down, grab yourself some coffee, dial in, because I'm going to show you two things today that is absolutely going to up your game. Now, hey, look, if you've never been to my channel before, we do this every single week. I show you how to sell premium, put money on the table. It's not pie in the sky, buy and hold, hoping we make a profit. This channel is all about using our money or our shares to generate cash that we could spend. So look, for all you retirees or soon to be retirees, I want you to subscribe to the channel. It's right there and it's free. Hey, look, I'm just like you. I'm 53 going on 54, and God willing, next year, I'm going to go ahead and turn the lights out. We're going to enter retirement, and this is my part-time job. You too can do this. Okay, you just have to buy in, get your financial education, get motivated, and you too can generate these kind of profits. Okay, so if you like anything you hear today, I want you to bang that like button. It truly does let me know you like what I'm doing. Now, what I'm doing is this. I only have about 20 days in 2021. I'm trying to get to $110,000, beat my last year's record. Now, my goal this year was $65,000, so we absolutely blew that out of the water early on. Can you imagine using your portfolio, chisel off a little bit of your portfolio and generate over $65,000 a year? That is like real income. Now, I've been doing this for over 5 years, and I've gotten so good at it that now I'm trying to break six figures every year. And it's absolutely unbelievable how we can use the volatility in the stock market to do that. This year, this coming year, there's going to be tons of volatility in the stock market. The Fed's going to dial down its tapering, and I believe they're going to raise interest rates. When you have inflation at 6.8%, absolutely killing middle America, something's got to happen. And the Fed has to raise rates. I'll tell you what, be ready. Learn how we can use negative volatility to pocket real money. Now, I'm going to show you a trade today for which I did that. Pocketed over $1,000 in a very short time frame. We get our money back. We're going to do it again. So let's go ahead and get to this. I'm going to show you that trade, but stick around. I'm going to show you the no risk trade, the no risk covered call trade using a protective put, the way John uses it. Now, let me show you a trade for which I knocked down over $1,000 using 300 shares of this volatile stock. Now, as you know, over the past couple weeks, we've had some volatility in the stock market. Now, I'm not like other YouTubers. I mean, I'm in the game. I'm trying to make money. I have to pay the bills. Okay? This is very important. I make no money on YouTube. You have to understand, I'm in this game to make money. I want to live the life, pay some bills, help my kids and my grandkids pay for college. So this is real. And making $1,000 in less than 7 days is real money. Now, with that said, what I'm going to do is show you what I send to the members, because this is the kind of value you get. Okay, 49 cents a day. Okay, 49 cents a day. You're going to get all of these trade ideas, seeing the world through John's eyes. Then you get all my real-time trades. These are the ones that I've done. And in 2022, I'm going to create my $100,000 poor man's cover call portfolio. And remember that disaster recovery? We're taking those losses and we're going to battle back in 2022. I know a lot of you out there are holding the bag on a lot of stocks. You're emotional with those stocks. Well, we're done being emotional. I've talked about this. This is the best stock recovery strategy on the internet. I'm going to tell you right now, FOMO is not a part of our trading in 2022. So I want you to stick around. I want you to go get that spreadsheet. If anything, go to cptdashboard.com, click free spreadsheets, grab your copy of the total income tracker, for which you're going to see I place all my trades in my total income tracker, and the disaster recovery tracker. Tell you what, it's time to battle back. It's time to get off the bench and forget FOMO. Now, let's talk about that volatility trade because it was a directional play. I sent the members these 2 emails about volatility. These are opportunities, okay? We don't look at volatility as scary times to not look at the TV or look at your 401k statements. No. We look at these opportunities to pounce and make money. And we use the cash secure put to enter the trade first. Okay. There's certain rules that we want to adhere to. And using the cash secure put in 2022, I'm going to enter most of my trades so we can have premium. We can have money coming in for our first trade. And then we can move forward and manage the position, okay? So that is very important. We have to manage the trade because I'll tell you what, this market can swing 5%, 10% up or down. I don't want you to be fearful. I want you to sit back and say, hey, how can we profit from it? So let's look at the email I sent to the members. Now we're talking volatility because the markets were getting kicked in the ribs. But again, we use this as opportunity. See, when the market falls, we look to use it as opportunity. Okay, this is why I always have a percentage of my portfolio sitting on the sideline, fresh powder, ready to pounce. And in this case, I had some fresh powder and I was going to use TNA. Now, a couple videos ago, I told you that we're going to use the 3X leverage ETFs, but we're going to use indexes. We're not going to use stocks because stocks will absolutely F us. Look, there's people involved, right? I mean, hell with that. We get involved in Wynn. The next day we find out Steve Wynn does what he does and the stock's down by 50%. We're not doing that. We're going to use indexes to profit. But now we're going to juice that up a little bit with the leveraged ETF. I absolutely loved where TNA was. Remember, that's the Russell 2000 small cap bullish 3X levered. Look, if you go to YouTube, you will hear all these people say, oh, don't use the 3X levered. Oh, you're going to lose money. Look, we use it for 30 days to sell premium. I don't care if it's a depreciating value. I'm going to buy the stock and I'm going to write the covered call. We're going to do the at the money strikes and we're going to collect our premium. Yeah, a buy and hold investor will buy it. If the stock goes down, they actually lose money. They actually lose even more money because remember, it's a managed ETF. It gets rebooted every day. So not only are you losing the points, you're losing a tiny little fraction of administration fees. And that's where those YouTubers will say, it's a depreciating asset, stay away. Ha! You know what I'm going to tell you? We're going to buy the ETF and we're going to immediately sell that at the money strike and we're going to collect that fat premium for a nice directional play. Remember, this is all about direction and the stock market's getting killed a week ago. We're going to use that opportunity to play a directional play with TNA. And I used the cash secure put. Now I told the members this, I said, look, get ready for wild swings. I mean, if you think this thing is just going to passively trade in 2022 with the Fed going to do what they're going to do and inflation already at 6.2%, you are not watching, okay? It hasn't happened yet, but it's going to happen. And I need to be prepared. So I always have a little bit of cash on the sideline. Now, in this case, I did. And I wanted to use that as an opportunity because with the new variant, we get the small cap index getting hammered because small business, the thought here is small business is going to be most affected, right? People aren't going to go out. They're not going to go out and spend that money that they've been saving. So the Russell 2000 small cap index, that index is going to fall. Now, with TNA, it falls 3X the index falling. And that's where we want to use the juice of the leveraged ETF. What we try to do is pick our entry point at the low, and then we sell that at the money strike. Now, I didn't buy shares for this, but let me show you this chart right here. This absolutely will blow your mind. This is TNA's chart. Look at that base. Even in good times and bad times, this thing is hanging near 80. And for me, I'm thinking to myself, anywhere near 80 is a great opportunity to get an entry. Well, that's exactly what I did with my cash secure put. And I even told the members in that other email what strikes we're looking at. Look, I'm not a stock picking service, but I'm going to let them know, seeing the world through John's eyes. I'm going to tell them where I'm going to get in. And that's exactly what I did. Let's go to the chart. I'm going to show you how that played out and how much money I made. Now, again, I use volatility in the stock market to profit from it. So as you can see, TNA is actually peeling off just like the rest of the stock market. You know, we're not hitting higher and higher and higher. We've already hit highs and now it seems to be turning over. But we do get these days where it bounces right back up to highs. So we're kind of getting that resistance at the top. So we want to use the opportunity when it falls to support. Look, I don't know if the stock market's going to go above resistance and push forward higher, but I know one thing. Look at that line of support right there. So what I'm going to do is I'm going to play that. I'm going to play that because we haven't had catastrophe yet on the stock market. 2022 we might, but not yet. So I'm going to look at this 1 week crash in TNA for which the thing was trading for like 115. It's now trading around 85 when I entered this trade. You can see where it's at right now. I'm going to show you the numbers here. But I decided instead of doing an at-the-money strike for which I could have made over $8, right? At 85, I could have made $8. That's damn near 10% on a cash secure put. If it's at support, this thing could actually bounce, play it, work that bounce, and then head higher, and then I collect all that premium. I won't be assigned the shares at 85. But hey, I don't know if we're not going to get more volatility. So I decided to pick the 75 strike. And because I want 300 shares worth of action here, I'm only going to do 200 shares at the 75 strike. You can clearly see here that this thing, if it breaks support, it's probably going back to 75. So that'll be my first line of defense. Now, I'm not going to throw all my money at it. I'm going to go ahead and do 200 shares. So I got 200 shares and I think I got $4.30 for that. Now that's a 30-day trade. And now I'm watching because remember, I have another 100 shares sitting back waiting. I have the cash ready to rock and roll. And sure enough, TNA falls under 80. It hits 75. Absolutely feeling the pain. But hey, look, I got $4.30 of downside protection. If this thing collapses to into the high 50s, well, we're all in trouble. So that's when I deployed my other 100 shares, selling the 65 strike, making almost $4.30 as well. And now the stock market starts to rally. Now, TNA doesn't rally like the rest of the market, but it rallies enough. It rallies enough. See, early last week, it's trading near 75. Now the stock is moving higher, and I think it even got close to 90. So what did I do? This is an opportunity to cherry pick some cash secure put profits, and that's what I did. So when my option within the first week fell from 430 down to 130, well, I use a rule where if that option falls 50% in the first week, or 2 weeks sometimes, take it off the board. And that's exactly what I did. Let me show you the numbers for this trade. Look, I'm telling you, you could have been a part of this trade. I sent that email and I had a couple members come back and say, John, we're all in with you. And when I ended up buying back the option, they went ahead and bought it back too, knocking it down in this very short window. So as you can see right here, here are the two trades, okay? I did the 200 shares here at 75. I did the 100 shares at 65. We did the 21-day, December 17th, for the 75 strike, and we did a 30-day trade with that other 100 shares. Now, what I loved about this trade is the stock started to move. And when the stock started to move, look what I was able to do. I was able to buy this thing back at 114. The other one I bought for 111. Do the math on that. We're knocking down $658 on those 200 shares, $326 on that 100 shares. That's damn near $1,000 in this short time frame. I'll tell you what, we use the stock market to our advantage and we can make a lot of money. Look, a lot of people right now are buying, holding, they're fearful, they don't know where things are going. Look, when you join me, we look at these as opportunities, right? Even if you're a passive investor, you're worried, you're scared. Hey, you're going to get emails from me and I'm leading the charge. Look, whether you want to do the trade or not, it doesn't matter. What we do here is we look at every trading situation as an opportunity. And of course, my $375,000 in the past 5 years proves that. I'm going to try to make the kind of money in 2022 that puts that fat number at $450,000. Now, I don't know if I can get to $500,000 in 5 years doing this, but this is what I do. We sell premium. For you that are sitting out there listening to this thinking that I buy a meme stock and it goes up 1,000% and I make all this money, that's not the case. I have made this writing covered calls and selling cash secure puts on companies like 3M and Bristol Myers and Microsoft. We use some riskier ones like TNA and DraftKings and Pens and Win, right? We use them all. They are all opportunities to put money on the table. I want you to subscribe to the channel, bang that like button, and if you put a comment below giving me a leveraged ETF. Your name goes into a hat. I'm going to pick all those that entered a leveraged ETF in the comments. That's all you have to do. Just put the symbol. I'm going to take those names, put them in a hat. I'm going to do a drawing, I think, on Monday. You're going to get a free 1-month membership. I don't ask you for nothing but your email, no credit cards, no nothing. I just add you to the list. I want to up your game, but you got to put skin in the game. Give me a comment below. Now, I know some of you are saying, look, man, you got to get to it. You blah, blah, blah. But you know what? I do this once a week. I love jacking you up. And I know there's a lot of people out there that need to be inspired. Okay? You need to be inspired to get in the game. That's what I try to do. Okay? This is what I love to do. Talk to you, speak to you, and get you off the bench. Stop watching other people have success. Now, here's the trade, the no risk trade. Now, I say that with an asterisk. There's always a little bit of risk. There is no way John L. figured out a no-risk trade. But what I'm going to show you here is about the most minimal risk you can have with a covered call. Now, for some of you, you might not get this. Others, you're rolling your eyes saying, look, dude, we do this all the time. Here's my new strategy, and I'm going to deploy a spreadsheet on this. So when you set up your first trade, see, it's all about that initial trade setup. People say to me, John, how do you find your trades? How do you find the stocks? Well, when you find the stock, which eventually you'll do, then you're worried about that initial trade setup. Is it profitable? Is it one that John would do? Well, when we're using the covered call with the married put or the protective put or hedging our covered call share purchase, well, you want to make sure the numbers work out. You got to have a calculator that sets you up so you're profitable. So that's what we're going to talk about today. This is very crude. I have my spreadsheet I'm going to share on the website for free, almost complete. So look for that. We can use the covered call with a protective put, but understand, we're going to have to do this in stages. I want you to think of it like this. How much protection do I want? That's the question you ask. How much do I want to hedge? Now, I'm going to tell you how I look at things, so I want you to start thinking the way I do. Okay? I'm going to show you Riot because I have some numbers here for Riot. This is a trade I dialed up, and I think for most of you, you already get it. We buy the shares at 26 a share. Okay, we're going to buy 1,000 shares. We're going to do 10 contracts. That's going to cost me $26,000 up front. Now I'm going to go to the chart right now and show you what could happen and how this right here can help us almost have a perfect no-risk trade. All right, here we are. I'm going to use Riot as an example. Let's just say Riot has moved higher on the day. And it's now trading at 26. Okay, I know that isn't 26, but we're going to use that so I can draw on the screen here. Okay, I want to buy 100 shares of Riot. All right, so you know I'm going to have to put out $2,600. And you also noticed that a 30-day covered call at 26, I would have been paid $3.32. So I collect $3.32. Now, you're sitting there saying, I'm vulnerable because this thing will fall points, man. I mean, this thing will fall 3, 4, 5 points like it's nothing. How do we get protection, John? Well, you can do what most people do. They go ahead and buy a put, right? So they have the 26 strike. They then buy a put at 26. But the problem is you're going to make $3.32 and you might have to pay $3.32. You make nothing. It's a wash. So now you're thinking to yourself, okay, well, if I buy a put that's a couple dollars out of the money, say 24, okay, it's going to be cheaper. So now, instead of paying $3.32 for that put, I pay $2.75. Okay, I'm just throwing some numbers out here. Well, here's the problem with this. Yes, you made money on the covered call. And by the way, it's over $1, man. That's pretty good on a $26 investment for 30 days, right? But now you have given yourself risk. Between 26 and 24, there is a fat hole right there. If the stock finishes below 26 and above 24, that put finishes worthless. You then keep a stock that is down equivalent amount. Okay, so you end up losing $2.75, gave you no protection, and you're now left holding the bag of shares that are lower. Now, granted, your covered call is going to be lower as well, and you're going to profit that $3.32, but we need protection. We need hedging. So this is what I started looking into. If we use the golden rules of hedge protection, using covered calls and buying a put, what we can do is this. Think of this in different levels. I want level 1 protection, level 2, level 3. Now, these are weeks. Week 1 protection. I don't know about you, but what happens with me is when I buy the shares, typically what happens is that damn thing falls within the first week. My timing sometimes can be horrible. and that's what happens. So what I want to do is this. I want to add a little protection, making it a no-risk trade. So now let's look at the numbers, buying an at-the-money put, and see what the numbers look like. Okay, you got to stick around for my very crude chart on the next slide. So what we want to do is have week 1, week 2, week 3 protection. Once we get out to week 4, it really doesn't make sense because the profits are going to be so minimized. You're only going to make like 1%. You get the 332, you probably pay something like 281, and you split the difference. You have protection, but you don't make nothing. So let's look at 1 week protection. So for 1 week protection, remember I bought the shares at $26. We go ahead and write the 30-day covered call. We collect $3.32. But before we did that, doing our homework and knowing what we're going to do, we're going to buy more at 26. We're going to do that 30-day cover call. We're going to collect $3.32. We have done our homework. The first thing we do is we buy the protective put. Say I want 1 week of protection. You're like me. You buy the stock, that damn thing falls within the first week. You want protection. Well, in this case, a 1 week, right? A 5-day, 1 week put that you buy will cost you 47 cents. Okay, so that's going to be $470 of our $3,200 of profit. So I'm paying $470 upfront for protection, meaning if the stock falls from 26, that option, that protective put option I own, right? I own the paper to assign somebody the shares at 26. It's now moving with intrinsic value. The 47 cents is time value. Okay, there's no intrinsic. The stock's trading at 26. There's zero intrinsic value because the stock's trading at 26. Now that 26 put is falling. Okay, it's now falling. So let's say it falls to 25. That put will be worth at least $1. Now, you bought the shares at 26. It's now trading at 25. You lost $1. Stock has fallen. Now, you haven't actually lost. It's unrealized loss. But that protective put has covered you because now that put is trading for at least $1. So what we're going to do on Friday, remember, you have the right, not the obligation, to stick that person with 26 shares that are now for 25. You're going to sell this option, and that's where you make your $1 of protection. See, that week's over. Stock has moved down 1 point. You lost 1 point on your shares, but now your protective put made you 1 point. Okay, that's protection. And notice, if you did this for your first week, maybe your first week of protection, you only give up $470, you still make $2,800. That would be a 10.9% on Riot. If you extrapolate that out, like other cover call writers do here on YouTube, that would be 131% cash on cash annualized return. Now say, for example, let's go to the chart. Here's your covered call. Okay, here's your put. Now, the stock has fallen. You're covered 100%. Your shares are down, but you have been protected with that put 1. Say you wanted P2 protection. You say, you know what, John? I think this is actually going to last for 2 weeks. Well, if you go to the P2 protection, look what you get. You get paid $3.32. You pony up $1.58 for that 2-week protection. Now you're giving up 50% of your covered call income, but look at the gain. You still make $1,700. You make 7% cash on cash. That's an annualized return of 80% if you do this every single month. Now I know some of you are saying, man, this is too good to be true. Here's the deal. A lot of people can't do this. They get paid that fat $3.32 and they can't do the put. They don't want to give up the profits. This is why we use spreadsheets, because the spreadsheet tells us the numbers. See, if I didn't have this spreadsheet, I'm looking at that put and I'm going to pay for a 3-week put, right? A P3 protection, $2.15. I'm only going to collect $1,100 for $26,000 risk. Well, the spreadsheet gives us that feedback. And I even did a P4 protection where if you did 4 weeks of protection, you'd pay $2.81. You got $3.32. You're only making 1.9%, but you're fully protected for 4 weeks. Think of this. At this point, time decay is now hitting your option. So your covered call option is absolutely dwindling to nothing. That's $3.32 in your pocket. You've lost hella money on your shares, but you're sitting there with a 4-week all intrinsic value put. And guess what? You're going to sell that put on that expiring Friday, and you have made what you have lost in your shares. Now, let's take a look at the charts. Right now, P2 protection would have protected you a little bit. The problem is you're still down. The P3 and the P4 almost get you back. And then, of course, the shares would not have expired above 26. You still own the shares, but all of that P protection gave it to you. Now you have your shares and you're going to write a covered call on a green day, right? Golden rule number 1, it has to be a green day because we want the put action to be as cheap as possible. You would have done the same thing over here. That thing would have rocketed higher and yeah, your put goes to nothing, but look at that. P1, P2. P2 would have saved your ass, and here you are. You're getting that downside protection. Now, I'm going to tell you this. It goes back to being disciplined. If you're not disciplined, you won't do this. With Protection Hedge, you have to try to adhere to. We want to buy our protected put on a green up day because the put is going to be cheaper. And our call premium is going to be pricier. We're going to get more for our call action. You have to decide what put protections you want. P1, 2, 3, 4. And live with it. Okay, you got to live with it. That's the discipline part. You were paid $3.32. You're only going to make $1, but you're protected. And I'll tell you what, you can manage this trade after the fact. Even if you go to expiration with your put, you sell that put, you have the money in the pocket, your shares are down, you can manage that. Okay, this is how you become great. Not just average or good. You become great at selling premium. And when you're great at selling premium, you're knocking down almost $375,000 5 years doing what we do. Now, I know you want to be a member. Look at that phone app. I show you all the trades I do. If you click on that phone app right there, it's going to take you to the blog post that I do for every single trade. Hey, look, if you liked anything you heard today, I want you to subscribe. We come back every week. I'm going to show you this stuff in 2022. I'm going to up your game. The membership has a 1 free month offer. Sign up. I'm going to up my game so it ups your game. There is nothing like it on the internet. My upgraded CTP dashboard membership. Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.